Welcome back, everybody. Sive Morten is here with the ForexPeaceArmy.com. As usual, our daily update on euro currency. So what we could say about the recent performance. The payrolls report have put us a really big dirt with the early reversal. That was really a great trade. I would say this just was absolutely perfect combination and potentially very attractive, with the one nuance that we were not with this trade, unfortunately. But maybe somebody was really fast enough to jump in and get some money on this big action with the payrolls, because it was really not good coincident when particularly the point where we were watching for reversal is coincided with the moment of the data release, and that actually you could see what has happened. So we just were watching for levels for a few pips lower, and if we wouldn't have the payrolls, I'm sure that based on this drop in a couple of sessions we would get these points for entry, but unfortunately that has happened. Still, it's not the reason to be upset, and actually as part of this business, let's think what we could do currently. So here's the two moments, in general, the 2 points in our plan that we intend to follow. First of all, we have mid-term performance and short-term performance. On the short-term performance, particularly on the daily chart, what we have great thrusting action. It has really good momentum, and as a result of this performance, we've got, you can see, nicely looking huge morning star pattern with this reversal candle that engulfs actually 3 previous sessions. Great momentum. The negative moment here stands that market is very close to, well, actually the target of the retracement, because in one day it has reached the 50% of the whole downside action. If we still treat it as a retracement, and we have reasons to treat it as a retracement, I will show a bit later why we actually have reasons for that. The potential of this trade might be just somewhere around 618 level. Otherwise, if market will break it up and keep going higher, it will not be a retracement anymore. It will be upward continuation. So if we speak about retracement, we could say that, well, actually the target might be somewhere around 1670 or somewhere. So correspondingly, to get the money on this potential trade, you can't place stop here, because your potential target, if even we suggest that here will be the pullback, which we actually count on, the risk-reward ratio will be not attractive. So correspondingly, market gives us no choice but to make an entry with this trade on some fib support level on lower time frame, and based on some minor pattern that might be forming around this fib support, to minimize the potential risk, so that we could place the stop order based not on the whole this big daily pattern, but on a small pattern that might be formed, say, on the 30-minute chart, on the hourly chart, when retracement happens. So speaking about the levels, here we have for now 1517 and 1470 approximately. That two levels. Also, guys, keep an eye on the 1490. This is the 50% level. I don't have it on this chart, but euro currency likes the 50% levels most of all. You could see it even by on a daily chart, 50% level. So idea is as follows. So we're waiting for some pullback here. By the way, guys, take a look. Additionally to the 50% level, here we have natural resistance with these lows been formed previously. So based on this plan, watching for the level, for example, starting from the 30%, we'll drop our time frames and watch how market reacts on this area. Once we get some minor reverse hand and shoulders, butterfly, whatever, we use this pattern for a stop placement, which will be relatively close to the price action, and making our risk-reward ratio acceptable. That's an idea. So that's what about the short-term trading setup. Pay attention, guys, that on Friday, grabbers haven't given us any hurt, because once they have been formed, market moved a bit lower, and actually the target of the grabber has been done. Market taken out of these lows. They work perfectly. But that was only the minor minimum target of these patterns. So at least these patterns have worked. So that's what we intend to do with this pattern. Now we're returning to the mid-term perspective. as was suggested already through the last week, chances that might be just a pullback, not the reversal. And market could keep going with this downside action still exist. Why? Because downside action was not actually slower than currently upward action, the same strength. On the dollar index, if you will see, we have really strong acceleration. I have shown you this chart on Friday, if you remember. But the difference here is that market here is near the XOP target, but dollar index just around the OP. And with this acceleration, it has the XOP on higher levels, or that it could keep falling. So that's the reason on a dollar index. Now, if we take a look on the monthly chart, you could see that here we also have a few bearish reasons. First is market overbought. Reaction here was moderate. I wouldn't say that's really big. We have dark cloud pattern here as well, and almost tail close, and in fact tail close right on in July. So I wouldn't say that chances for a possible kind of the deeper ABCD retracement here are very low. So I would say that chances for that exist. Besides, you could see that we have here huge Garter's triple to sell. And by this pattern, actually, the minimum target stands around 109.50. So I wouldn't take off the table possible downward continuation, despite the numbers on the payrolls was really awful. But in today's weekly report that we have prepared, we have explained recent data, we have explained why it does not seem as it stands on the gross domestic product. This is 3% nominal growth, but in reality, the background stands much worse. And the payrolls is vice versa. Numbers are bad, but average payrolls in this year 120,000. Not really very bad, average numbers. So I think that market, after this shock that has happened on Friday, gradually calm down a bit. When dust will settle, they will take the reasonable view on the market, and actually the situation could change, retracement still to the downside could happen. That's the second scenario that we will keep an eye on. Actually, that could also come in place later. But first, let's take care about this one and see what we get on Monday and Tuesday. Just give us some clarity what to expect next. That's probably all for now. See you on Tuesday.